Hello and welcome to the look ahead for Monday, the 8th of January, with me, Fiona Cincotta, Senior Market Analyst at City Index. So we'll start, as we always do, looking what's on the economic calendar and the earnings expectations. Monday, as far as earnings are concerned, there are no major companies looking to report. Straight on to the economic calendar then, we've got a couple of items from Europe, but apart from that, it's pretty quiet. So first up is going to be German factory orders, month on month in November. Now they're expected to rise 1.1% after falling 3.7% previously. Also in focus will be Eurozone retail sales, which are expected to fall 0.3% after rising 1% previously. Now, retail sales, I think, are going to be very much in focus because we did see German retail sales data come out today, and that did come in much weaker than expected. Retail sales plunged 2.5% in Germany month on month. That marks the largest, for the Eurozone's largest economy. That's going to have a big influence on retail sales data or retail sales figures for the Eurozone as a whole. And what we're seeing there is, really reflecting the household struggles that households are facing amid record high interest rates, and as inflation is starting to tick higher again. That's right. So we had Eurozone inflation data out today, and that actually showed that inflation ticked higher to 2.9%, up from 2.4%, which does raise some questions about the ECB's ability to be able to cut interest rates in March, which is what the market has been pricing in. Now, what does all this mean for the markets? Let's have a look. This is the euro US dollar. Now, obviously, we've been talking about the Eurozone inflation, and we're also talking about Eurozone retail sales and German factory orders. But let's not forget, today we had those US non-farm payroll results come out. They were much stronger than expected at 216,000 jobs added, compared to just 150,000 that were expected. We also saw average earnings increase 4.1%, which was ahead of expectations. So that's going to get the Federal Reserve a little bit nervous about the idea of inflationary pressures rising again. And again, it raises those questions about the market's expectations for Federal Reserve rate cuts this year. We know the market had been pricing in sort of an aggressive serious cycle of rate cuts from the Federal Reserve. And actually, given the data, the strength in the jobs market, and recent comments that we've heard from policymakers at the end of last year, that perhaps there is this idea that the market may have got a little bit ahead of itself as far as rate cut expectations are concerned. So what have we seen? The euro US dollar, as we saw at the end of last year, it rose up to over 111, has been falling off on that US dollar strength as we've seen the market repricing those aggressive Federal Reserve expectations. Now, today we did see that the price just briefly spiked below that 108.90 support level, which had been holding. It dropped to around the 108.70 level, but there's a very long wick on that candle, which suggests that there was little selling demand at those lower levels. We saw the price rebound higher. It broke back above the 20 SMA, which is encouraging. So bulls are going to be looking to continue with that movement to push prices back over 110. And then Friday's high of, which was today's high, and a move above that 110 psychological level will bring 120 into focus. On the downside, I think we'll be looking for a break below that 108.90 and the 108.70 to expose the 200 SMA, which is at that 108.15 level. Now, the next one to be having a quick look at here is the DAX. Now, we saw that impressive rally across the end of last year, but actually we've seen a little bit of consolidation. It's not been able to push back over those all-time highs. It has, in fact, I think, just been sort of trending that little bit lower as it consolidates. Now, as far as support is concerned, we saw support tested at 16,450 today after the non-farm payroll release. But actually, again, the price rebounded, suggesting that support is holding. Again, we've got that long lower wick on the candle, suggesting that selling demand at those levels was weak. On the upside, we're going to be looking for a rise above 16,650, which is pretty much where it's testing at the moment. And if we can get a rise above there, then that can bring the move back towards that 17,000 into focus. Now, finally, there's not anything on the economic calendar with regards to this, but I thought it was a really interesting chart and one that I wanted, or a map, in fact, that I wanted to show and share with you. Now, this is a rerouting that we're seeing of the shipping from the Red Sea that's now going round the Cape of Good Hope. Now, obviously, what this means is it takes longer for products to get to where they're meant to be going to. Now, as far as things like, clothes, it's not really necessarily that important. But when we're looking at perishable items, or in fact things like oil, which is going to take longer for their shipping, there's potential there for supply disruption as well. So I think what we're seeing is, there's been a lot of media and a lot of focus on the rerouting of that shipping, which has just made the oil markets a little bit nervous about what's going on in the Middle East, and concerns about the conflict broadening out. US Secretary of State Antony Blinken is going for a trip there in order to try and sort of contain the Israel-Hamas conflict, to prevent sort of a broadening out. Now, what has this meant for oil prices? Now, oil has picked up actually it's seen a recovery from that January low of 69.50 at the start of the week. It's trading quite a lot higher. It's breaking above, obviously, the 70 level, is looking to test $75. That's going to be the next one for the bulls to be going for. After that, it'll be the 76.10, which is the December high. If the momentum doesn't hold up, then we can see on the downside some support at around 72.20, and then that would expose the 20 SMA. Sorry, that's the 20 SMA, which is at 72.20. Below that would be looking back at that 69.50 level as a support. So that's all from me. I hope you like what you've heard. If you do, then please do give me a like. If you want to receive more videos like this, then do subscribe. And apart from that, have a great weekend.